Hello, fellow traders. This is Oscar, the lead analyst at Binarium. In this video, we will talk about trading on a 15-minute time frame and discuss a strategy that uses support and resistance levels along with moving averages. Why did we choose the 15-minute time frame? The reason is that a huge number of traders trade within the day, which increases volatility. Each group of assets and exchanges has its own activity patterns. However, the 15-minute time frame is great because it suits any market and most strategies. It also maintains a balance between detailed price movements with numerous signals and an overall market view. The 15-minute time frame trading strategy is perfect for those who prefer to open many trades during a session. Now, I want to know which of our viewers regularly trade within the day and who will benefit from this strategy. Please write in the comments which assets you traded during the last session. So the main goal of this strategy is to use short periods to identify and capture short-term trends. To do this, traders use support and resistance levels in combination with other tools such as patterns, RSI, oscillators, and Fibonacci lines. In our strategy, we will combine support and resistance levels with moving averages. Support and resistance levels will serve as probable points of reversal or breakout, while moving averages will confirm the market's overall intention. The main rule in this strategy is to find multiple confirmations for the entry point. Let's move on to the practical part. First, let me remind you about the use of support and resistance levels. Right now, I want to highlight that market participants use support and resistance levels to identify areas of interest on the price chart. At these levels, the main trend can either change direction or continue its strong movement. It doesn't matter whether it's a 15-minute chart or an hourly one. These levels will always serve as important reference points. Market psychology plays a crucial role in forming support and resistance levels. Investors and traders focus on price levels where buying and selling occur. These areas contribute to increased liquidity as traders monitor the same price levels. In other words, support and resistance levels are important zones on the chart that help traders identify potential price reversal points. Now let's go through the step-by-step process of plotting support and resistance levels. Step 1. Identify the resistance level. To do this, find the highest concentration of peaks over a certain period. This is the price level above which the asset's price has not risen for a significant period. The trading history shows that the price has not yet surpassed this level. Step 2. Plot the support level by identifying the price lows. On the chart, we see that for some time, the price has not fallen below this level. Step 3. Identify the accumulation range. Typically, a breakout occurs after accumulation. If we focus solely on support and resistance levels, the breakout point becomes our entry point. Note that after such a breakout, the price chart and market participants will find the next trading range. In this example, we see that the price chart is testing a strong resistance level. This indicates that market participants are not ready to buy further. In such situations, there can be two possible outcomes: active selling or some price movement consolidation. Since we see that the price chart has strongly reversed, it is evident that the price will continue to move within the trading range. At least, the first wave of decline will likely continue to the local minimum. This local minimum can serve as a reliable price support or the nearest target where the price might go. However, for our strategy, support and resistance levels alone are not enough. To find a more precise entry point and confirm the signal, we need the moving averages indicator. We will use two simple moving averages with different periods. The indicator is denoted by the abbreviation SMA, which stands for Simple Moving Average. Just to remind you, moving averages, also known as MAs or movings, are one of the fundamental analysis tools that smooth out price fluctuations and help determine the overall trend direction. Since we are discussing a trading strategy on the 15-minute time frame, let's combine support and resistance levels with moving averages. There will be a separate video discussing the types of moving averages and their applications. For now, Let's focus on moving averages within the scope of our strategy. To start, we choose the type of moving average we will use: SMA, WMA, or EMA. I recommend selecting the simple moving average for better breakout visibility, as it provides a smoother view of price movements. Setting the period is the next step. I use two SMAs with periods of 14 and 21. Do you know the difference between these periods? Write in the comments what distinguishes the use of a 14-day SMA from a 21-day SMA when analyzing market trends. Now let's examine the strategy with a real example. I opened a trade up, and now I'll explain why I made that decision. We can see that the price chart formed a local bottom, followed by a small consolidation. This indicates that market participants are not eager to sell further. Notice that the price has settled above the moving averages. This signals that market participants intend to buy. At the bottom, we have formed a local price support, confirming that selling activity has significantly diminished. Thus, we have an additional signal to open a long position. In this example, we also observe an interesting pattern. After a brief consolidation, the price chart bounced off the local minimum, i.e. the support, and is heading towards the local maximum, i.e. our local resistance level. To sum up, combining support and resistance levels with moving averages helps identify more reliable trading signals. For instance, if the price tests a significant resistance level while the moving averages indicate an upward trend, it could be a good signal to buy. Meanwhile, the trade is closed with a profit. Great job!